Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on the euro currency. So this week has become very important for a market because it clarifies a lot of important information to us. Since we've got a lot of statistics on this week, we've got the Fed statement, and today we provide weekly report where we have tried to understand the overall situation as it stands currently on the market and what to expect within the medium-term perspective in a few months and in the longer term. So the first moment is that we're actually very happy that our long-term view stands well, and it's confirming by the overall situation that we see on the markets. Statistics is really great and shows very big numbers, so you probably saw the gross domestic product released, consumption that we've got last week. The real estate market also shows very good performance. Additionally, we have the confirmation of the inflationary growth. Inflation is still growing on the markets. But at the same time, as market is approaching to the turning point, it seems that, well, we talked to this topic in details in this research. But shortly speaking, market has not a lot of time before the changing will come. Well, our suggestion should be somewhere 2-4 months probably, when the Fed starts to change the rhetoric in a direction of the tightening policy. So you know that Canada already is turning to the hiking. The Bank of England on the next week is also coming up with this. European Central Bank, although the Christine Lagarde has denied the hints that she made in the last statement, but by the market opinion that in June they also could start some verbal intervention, some rhetoric concerning changing of the policy. And just Fed repeats the same mantras that is Cornelius Fudge, that he's not back. So inflation is not back and everything stands good. Don't worry, be happy around that. But this is not really the case. So in today's weekly report, we intentionally provide a lot of opinions of the analysis from the big companies, and altogether they talk about the same thing. Starting in June and closer to the end of the year, Fed starts verbal preparation for changing of the policy. In 2022, in the beginning, somewhere maybe in spring, we will see, and the taper tantrum should start. So what does it mean? It means that Fed should starting to contract bond buying program from the market. So it should hold the long-term interest rates. Finally, on the third stage, close to the end of the 2022, real rate hiking stage should start. Currently already by the futures price, it is 90% priced in the first rate hike in December 2022. That is consensus of the analysis among a lot of big companies, including PIMCO and other monsters of the market. So what does it mean? It means that market, in general, it confirms our view that market is coming to the decisive moment and turning point where the situation starts to change. As you know, 87.4 target in the dollar index, where it should happen within the 2, maybe 3-4 months, as we suggest. At this moment, since we do not know precisely the turning point, market becomes very vulnerable and nervous. A lot of volatility is rising, and the fact moment of the reversal could happen unexpectedly. So when situation turns, But currently it already stands at the eve of that moment. So if you invest in the currencies in the longer term, that's the point where you start thinking about taking long-term dollar positions. Also, for other investors, if you trade the treasuries, you should think about taking the short position on the futures. Because currently market stands on retracement and this comfortable point to consider long-term investment. So that's what we have in the long-term perspective. So I suggest you read the report because it contains a lot of detailed information on this subject and it's very important. Now let's turn to the technical situation and the short-term trading action. Here is also some tricky moments exist. So first of all, right on the background of these fears of the inflation that I just talked about, you could see the big sell-off that happens on Friday. That was good statistics that we've got in the market. In general, from the technical point of view, there is nothing wrong with this sell-off. Why? By actually the moments that we discussed last week. First of all, market mostly has hit our 1618 extension here with this section. So it stands at the 618 resistance. If you remember, that was the 618 level. We're considering the possible reverse head and shoulders here that suggest deep retracement. And finally, the deep retracement is supposed just because that is the bullish reversal swing. After the downside action, market shows the first V-shape reversal. And it suggests deep retracement. So I do not see something really wrong with this downside action. On the potential target of this retracement, we think that it might reach the 618 support, 1875 and 1870. That is possible. But on the coming week, this level is not very interesting to us, and we mostly will be focused on that level, it's 1970, 1980, where we intend to consider taking the short-term bullish position. Well, whether it will be short-term or not, we will see in the process of the trading. Because once we will get the long position, we intend to move stops to the break-even and see what will happen. Because take a look, that is really a very comfortable situation. We have confidence support on the daily chart, natural support resistance area, so it was support, breakout, resistance, breakout, now it's again will be support. And daily oversold level stands very close, just 40 pips, 30 pips below the market. So overall, this range makes us comfortable to consider taking the position with a placing stop somewhere below this area, with a hope on at least the bounce where we could move stop to the break-even and see what will happen. Or maybe upward continuation, we will see. Because next week a lot of statistics will be as well, including the non-farm payrolls release that might change the situation. If no upward continuation will happen, we'll be watching for a deeper retracement and reaching of the 1875 area. But as I said, the technical picture has some tricky moment, and it stands on the weekly chart. The point is that with this sell-off on Friday, market has formed bearish grabber on the weekly chart. The grabber itself suggests the taking out of these lows and raising the whole bullish context. Whether this will happen or not, it's difficult to say, because sometimes grabbers becomes the byproduct of the rally when the market by the Friday's close just has enough time to just proceed higher. But since the grabber has been formed around the major resistance area and on the weekly chart, that I think should have more value, and we should be very careful to dealing with it. That is really the big problem for the bullish context, and this grabber is real because I have checked the futures price, futures on the Chicago Mercantile Exchange, and there also we have this grabber on the futures to the euro. So that's the things that we should keep in mind. It means that despite that overall construction looks nice for possible taking the long position, we should act carefully and take the long position only when we will get some clear bullish patterns around this confidence support. Not blindly just because market hits the strong support area, but we should get some patterns on our back. In general, we intend to consider the following patterns on the follow time frame chart. Here is market is forming perfect head and shoulders. So our tendency to step forward, one step back has been cancelled. You can see with this sell-off. And currently market is forming the perfect pattern. Why? Because take a look, it has the perfect ratio for a hand shoulders, 1618. And second, we have the strong sell-off on the slope of the head. That is very good factor for a hand shoulders pattern. Divergence as well, and all the stuff stands and starts right from the major 618 resistance. So what else do we need? So with a hitting strong support area, that coincides with the neckline, by the way, we consider taking the long position here. Now a minimal target will be somewhere at 2060, 2065 probably. That corresponds to the top of the left arm. Once this will happen, we move stops to the break-even and see what will happen. So it's also not forbidden to grab the profit, or at least partially. But that is the major idea. Now, speaking about downside targets, as I said, would not exclude the chance that market could proceed lower and hit this level. So the OP supposedly, AB equals CD target, will be somewhere around 90.20. But if we will use the XOP and the classical hand and shoulders target, you will see that will be somewhere very close to 618 support area, around 1870. So that's why we do not exclude this deeper action. This is the trading plan for a coming week. On the hourly chart, scalp traders could get additional chances to trade just because take a look, market has perfect thrust down, and here it could be brand body sell, double repo buy. By the way, the double repo we also could use because double repos will be formed around the support on the follow time frame chart right here. It could become the pattern that we actually would like to get because it could start the upward bounce. This could be the starting pattern for upward action that we intend to take part in. So the double repos also could be useful to us. That's approximately the overall situation that we have. It's not very simple, but as you can see, EUR again starts to form really bright patterns. That's pleasure to use in trading.